All right, hey guys, Sam here. We're Monday. Well, what are we? Monday the 11th. Yeah, Monday the 11th of December here, and seems like a good day to do an update on Bitcoin as we've had some pretty extreme volatility over the weekend. We've now got the CBOE futures in play in the market. And, we're seeing some pretty remarkable technical trading. So I've got a few things to go over today. And one of the things I want to talk about is this disparity that we can often see between exchanges. I have some members that struggled with that over the weekend. And there's no easy answer, but there are some things that you can keep in mind, in the future when you're seeing extreme volatility and then you're seeing disparity across exchanges. So let's dig in here. Now I'm going to continue to work here from the Bitstamp exchange here. This is Bitcoin to the dollar. I've got the 8-hour up here on Bitstamp. This has been the reference chart I've been using, so we'll stay with that. But I'm going to go look at it on GDAX as well, so you can see what happened to a few traders over the weekend. There was a tremendous amount of volume being served up at GDAX and some extreme wicks that caused some problems for some people. So some things to learn there as well. But let's start here where it's been just remarkably technical. Now I've got with an 8-hour, I'm working back here. So we have, we continually are relabeling, and we may yet need to relabel again. So right now, as you can see, I've got in green here the largest degree. I've got a 1-2, followed by in blue another 1-2, another 1-2 on this degree. So because of the extreme price action, we continually have to relabel. We may well be relabeling here, and as of yet, I don't think that's necessary, and I'll show you why. Because if we do our measurement here, all right, so from this low here as a potential 2 low to what I have here as a 1 low, we come a little shy here. We go right to the Vegas wave. We get in between the 38 and the 50. Right, this is lower percentage of times that we'll see a 2 be that shallow, but it does happen, and we did have a very good technical break. We had what I continue to propose was an expanded flat here with that little wick high spike here. So I propose to you that is your one high rather than this. We did get good 5-wave subdivision down here. I won't retrace that. I've shown it in many videos before. But given that as a 1-2, right, so if that's a 1-2, then the next question would be, well, if that's a 1-2, could this also be a 1-2? And the reason I don't think that's the case is that if this were a 1-2, if we were going from here as a 1-2, it's very shallow. It looks much more to me like we have a 4 here, and then we had some fib relationship here from this low relative to the 1 back to the 2 here. We went right to the 272. Now that's not one to be discounted. That 1272 is the square root of 1618. We do see it often in the markets. That's why should be one of the fibs that you mark off. So given that, I think until proven otherwise, I maintain still the highest probability here is that we've got a 1, 2, 3, 4. Now we're putting in the 5th here. Now it just becomes a question of where do we disqualify, invalidate, have to relabel, because this remains potentially a relabel for yet another 1-2 if we're going to just continue to charge to higher prices. We can't make that call yet. So I hold this as a 3-4 until I see proof otherwise here. Now I'm not trying to call a top here. I'm just noting what I see in the market and where I see fib relationships coming into play. So let me pull some of this off here so we can not clutter the chart here. So if this is a 1-2, and the absolute extreme here, pardon me, for the 1-2 here in blue is the 2-6-1-8 for that as a third. So that remains an extreme. So until proven otherwise, this certainly looks like we've got a 4th of some sort here. So there's a lot of potential here to be relabeling, particularly if we're going to blast off to new highs. But right now I stick with that until I see evidence otherwise. So I'm going to pull this off. If indeed potentially we have a 5th here of the 3rd, you would expect to see volatility working towards the 4th. Now take note here, if that were to be the third, and I'm not saying that it is, but potentially it could be. If that was our third, then we'd pull up here for potentially a high of the third here, and thus you see the box here. Highest probability for the fourth would be between the 38 and the 50. So if that were the case, then we're looking for a much deeper retracement. We did, if I put it on here, you may recall from a prior video that we did wick the 23.6, right? So you see this, we wicked it to the tick here. We went to and through over the weekend. So but this is certainly a possibility. We may have the fourth here, and we're going up again for a 5. That certainly is definitely a possibility, right? So that wouldn't change this count here. In white here, we'd stay a 3, 4, and a 5. This would be the fifth of the third in blue. We'd have our fourth in, which certainly is a potential count that's valid. So if that's our 1, 2, there, our 4 is in here with the pivot being between the 23.6 and the 38. If that's the case, then we're off to new highs, and then we can start projecting for a fifth based on fib relationships that we would anticipate. One wave projected from the fourth wave, but we're not there yet. We need to see a clean break of this pivot here. To call this a hard pivot here for the fourth. We don't quite have it yet, but we're certainly getting close to it. So let's allow for that, and then if we break here, of course, we're going to want to see impulsive price action here to carry this into what potentially, if we go down to the 1 hour from the 8, we're going to want to see impulsive action here to begin perhaps the one wave of the fifth wave. Right, so the fifth would be up much higher. Here we'd be pushing up, potentially up 20K and higher. So let's go down to a smaller time frame, break it down a little bit, and see if it makes sense. Now I'm going to stay on Bitstamp. Now we do maintain some alternate counts, but right now this is the count that seems to make the most sense. So let's take a look at what happened over the weekend. So this was something I was posting up in the room. So I'll just take this off so you can see how I came up with it. So now here, this is on after the fact. So from this weekend, so we can see it 1, 2, we get a very clean 5-wave structure, and then a sharp pullback here for this 2. Now I'm on the 1 hour. I'm still on Bitstamp. So from this is our 3, 4. Right, so we already looked at that 3, 4. Now we're into a very clean, very clear 5-wave into the 1, potentially the 1 wave of the 5th wave here of this degree in green. So what would be critical to us, of course, if that's a good 1, you see I've wicked off that high there, so we don't want to see the 4th overlap that. So if I've got, from this, and this was, I think this was Friday, that's the 8th. So this was that scream higher that we had going into the weekend. So reasonable to project there. So if I just look for my targets that I would anticipate, so taking my length of my 1 projected from my 2. Well, here was the first target here. So this is the 1618, 175. That's the most common. We get just shy of the 272, which would imply to me that we may potentially be relabeling. So this is so extreme that it surprises me a little bit that we don't have a fib number there, but it may play. So we'd also want to check here just on the straight retracement to see if we get a relationship, and there's the negative 618 that we looked at, which actually gets to and through it. But here was the pull down for the second, also a little bit shy of the 50, so likely a front run. Off the 50, here's the first target, and then here's the absolute extreme at negative 618. We actually get to and through it. So per that count, all right, so let's pull this off because we have a reasonable expectation, and the first tell was how clearly this 5-wave structure played into the 1. So if we've got a 1, 2, okay, and we've now projected this as our third, well, again, just keeping it as rudimentary as we can, we'd pull from our 2 to what appeared to be our 3 high, and where do we go? All right, so there, you've seen it. I don't know how many hundreds of times I've shown this to you. So this is right into the pocket, right? In fact, I drew this up for members Saturday morning and said, keep an eye on that. So there, you know, that's, you know, again, we've seen it hundreds of times. We know the algos like that. There's the initial, the reason it goes there, right, is because anyone, you know, trading 101, new traders, they know that the 618 is a common retracement point. But what the algos will do is they'll run the stops on the other side of the 618. Which is why you want to look for the entry in the pocket between the two. You might, and of course, there are going to be times when it's not going to get in the pocket. So your entry is really just ahead of the 618, just to be sure that you filled and stop on the other side of the 65. And you know, given that extreme spike, you know, not unreasonable to give it a little bit of wiggle room there. But indeed, we go right. Here's the 233. Here's the Vegas wave, right? So here's the 144 and the 1619. We get to it, and the 233 holds it to the tick. So just a perfect technical trade, right? This is on Bitstamp. Now, of course, if indeed we've got an ABC, we're going to want to look for a relationship between the A wave, right? So this is just common fib relationships. We look for a relationship from the A wave to the B wave, and the most common target is the 100%, the length of A projected from the B. And look what sits right in the middle of the box. So this is exactly what I talk about, you know, in all of these videos, is you're looking for confluence, right? So we've got, so look at the number of things that we have here. So we certainly have price pattern, right? If this is going to be a low and we've got a 1, 2, 3, well, we're certainly counting on the wave 1 high to hold. Right now, if we overlap, then we go into a diagonal. But we prefer to see, and our expectation is that we stay above that wave 1 high, and we stay with an impulsive structure. We're looking, so we've got our Elliott wave pattern. We've got just the straight algo pull, right down 618, 65 box. I've shown you 100 times. We've got the 233 right there. Then we've got the A length of the A projected from the B goes right into the box. I mean, it simply cannot get any better than that. That's as good a technical trade as you will ever see. It just, I don't know how else to put it. You know, the only other thing that I had showed this to members over the weekend was we put that. Where's my pivot high? We put the median line on it. It doesn't make in original recipe here, the original pitchfork, right? So we don't make the median line. So one thought is a failure to make the median line. So we know this from Andrew's trading principle number 4, that a failure to make the median line sets up the potential for a move equal to or greater than the swing that took it down, right? So that would be that swing. So we'd look for that equal to or greater coming out of that failure to meet, right? So here would be 100%. Look what we've just done, right, this morning. So we are now equal to and greater than that failure swing, right? So that's one scenario. Let me pull this off. Right. The other thought is, well, if we're not going to get there, let's check the modifications. So if we're not going to get there, so I would go to Shift and take a look at that. And well, that's kind of interesting right there. So we get the structural support from the Shift median line here. So we come right to the lower parallel, right? And now we go. So it's so amazing. So from this, so you have this enormous confluence right here, all saying, you got to buy that. You got to buy it. So then from that push up, then we go to the outside edge. So here's the median line pushed back to, we're through it. Now we go to the outside edge. Here's the upper parallel to the median. We retrace off of that. And I'm going to show you this here because this was technical as well. Now we push to and through it. So we can pull this off. So you had just this huge confluence down here potentially. Now, as I look at this coming down, I see potentially here this is a truncated fifth. So because I'm counting out the C wave, and we see that we have continued to experience this all over crypto, these truncated fifths and C waves. I see a 1, 2, 3, 4. Now note here in the one wave here, if I wick off the 1 because it's the same going down, the 4 does not overlap. So that tells me that potentially we've got a good 1, 2. Here's our big spike down for the 3. Here's the 4. Now, there was certainly the possibility that we were coming down for the 5. right? That was a possibility. But as we count it here, given that this held, right, because that was the buy, and I'm hypothesizing here, projecting that, because if I went down to a 15-minute, I might be able to squeeze that out a little bit better. But per that buy here, we don't come back and challenge it. We hold, and then we get this big push. So here was the tell that likely the 5 is in. So we get a 5-wave sequence. We get a truncated. This. So notice the length of the wick here. It's a deep. So likely that's just a push for algos to get the fill they want. Here's the 5th. So likely a truncated 5th that completes the ABC. And now we've gone impulsive. So let me pull this off now. Right. So if that's the case, then we're going to push. Well, that's my 3. I'm going to push this over here. All right, I'm going to push this here for the 3rd, and then I'm going to move the 4 over on the assumption that I've got a truncated 5th wave there, and then that is my 4. Right there. So if I line them up. So creating 3, 4. Now what am I looking for? I'm looking for an impulsive move coming out of there. So given that, so let me pull this off and just declutter the chart a little bit. So here's our algo target here. So let me draw this up so we have it. So here's our algo target, so I can pull this off. That's from the deep pull, right? Now we don't need this anymore. That's the 100%. So 5, 1, 2. So what are we doing now? So we're looking for, if I'm going to get a 1, 2, if this is my low, I'm going to go up to my 1 high here. We come just where you'd expect it, between the 50 and the 618. That's the most common area, the most common retracement for a 2 wave. Right now, here's the first algo target, the negative 618. We're to and through, so we can start projecting the relationship from the 1 wave, projected from the 2. Here's my high probability zone right here. Right, so we have the algo target. Remember, we drew that box. Now we've got this target here as a 3rd. Well, we seem to have stalled here. I'll get back to that in a second. We seem to have stalled here, but we can qualify it as a 3rd because we've gone in excess of the length of the 1 wave potentially from this low. Right? If this is our 5th, here's our 1, 2. We've exceeded 100% here, so we can qualify this as a 3rd. We don't know necessarily that we have our 3rd in yet because we've got some other targets here, and we haven't seen a deep enough retracement to really, be clear about having a pivot in here. We're just kind of stalling there. Given that, right? So you could certainly. Well, let's see, I would pull it here this way. So first I would check this. Let me get that back to original. We got to check that, right? So there's the potential, the corner pocket trade. From this low, let me dial it in there. You got to get them right on there. So with this as potentially our corner pocket trade down here, right, for this, that was the pivot on the 618, truncated 5th. So we're looking for, when we have maintained an expectation that we get to that median line. Let me make sure I've got this dialed in right here. Yep, bring it down just a hair. That's our high. Right, you got to get it exact. So we're looking for, right now we've got a failure to make the median line if these are the dominant pivots, that it appears that they are. So we've got a failure to make the median line. So it would imply to me that potentially we need a little more strength here to push up and catch this. We've got potential targets that we know are likely based on the fib, the alternate price projections for the 3rd, but we do potentially have the 3rd in, because it's 100%. Now, this would be disconcerting here because a failure to make the median line would imply, just as it did down here, remember failure to make the median line? If that's not going to get there, that sets up the potential for a move equal to or greater than the swing that took it up there. So for bulls, we want to see this hold, and then ideally, you'd see this wave 1 high hold, although potentially this could go into a diagonal. We could have the 1 of the 5th, or we could actually have the 5th. We don't know yet. So all we know is that we're hovering here, and we haven't quite, per those pivots, we haven't quite made the median line off of the dominant large 2, 3, 4, right? So given that, it's kind of a wait and see. Is there another opportunity here? Well, if this is my 2, right? If that's my 2, and we don't know that that's my 3, but I would certainly want to be paying attention to it, the potential, right? That if I'm going to pivot there, I got to be careful of this, because now I'm looking for my my fourth between the 38 and the 50. We don't want to see it overlap the 1. It could do it and go into a diagonal, but I'd prefer to see that hold. So ideally, right, if the market were going to cooperate, we'd come down here, we'd get one more push up to one of these pivots here to get the median line, right? So we in doing that, we eliminate the potential for a failure to get to the median line, setting up a deeper retracement. So we can't rule that out just yet. We want to see that. So here's your algo from this pull. So, I mean, this is possible, right? On a 1 hour, I would expect to see a little more subdivision. So I'd like to see this come back down here, maybe even challenge, the outside here. We may be going sideways. Hard to say. Right now, you're just kind of in between. You're in between. We don't quite have a new high here yet. Not quite. We're not quite at the median line. We're not quite at the fib pull. So, kind of just stuck watching it here. But certainly, all sorts of potential here for this to continue to move higher, give us our tap of the median line. But we gotta be careful, knowing that, listen, there's no guarantee we're just going to keep blasting off. We're very overextended. We had this very technical correction, but now we want to see it stay technical and look for the next opportunity. So as I look at this, if I were looking to be a fresh buyer here, I would be certainly comfortable buying in here between the 38 and the 50, but I would be tight on my stop. I wouldn't want to be too far beyond the 65 on that, knowing that potentially we could, it's subject to relabeling, right? And we don't right now. I want to see a tap of that median line. That's as it relates to Bitstamp. So the only other thing you might look at down here, when you're looking at your RSI and your indicators, right? So the value here of the Elliott wave indicator is it helps you define your thirds. Okay, so this is representing the difference between moving averages here. So the greater the gap, just represented as a histogram. So the greater the gap would imply the strength of the market, which would tell you this is likely your third. Okay, so given that that's a third, and then we see this divergence that happens. Do you see that, right? So we had very clear divergence as we were going up towards these highs. So divergence being new price high, but the oscillator is fading. Then we come down here. Look how nice this was, right? This was our right in the pocket between the 618 and the 65. We get that spike down on the RSI, bang, and then we get this little divergence here as well. So now we've hit it again. So what does that mean for us? Well, as I always tell my members and would encourage you, go to the oscillators last. There's way too much dependence on oscillators for traders, particularly that are new to the market. This is a last place to look. Does this tell me anything? Well, we're a little hot here. Thus the sideways movement. Now on a 1 hour here, I would not be reluctant to be a buyer here in between that 38 and that 50. This would not keep me from buying it. The fact that I'm not down below the 30 here, right? Because we see many a times where it doesn't get there. So I defer to the price pattern, and then you can always, problem with oscillators, you can always kind of get them to say what you want. So I guess the broader point here is if you're trading off of the 1 hour, stay on the 1 hour. So if I took this down to so just to show you what I'm talking about, if I take this down to the 15 minute, right? So there's my 15 minute, looking for more subdivision, which I'm not saying not to do. But if you're basing your trade off of what you see in the 60 minute, don't come down to the 15 minute to justify and say, oh, well, look, we got low down here. We got almost to 30, so this must be my pivot low. And now we're moving higher. That's a mistake. So I would tell you to, if you're basing the trade, and given the volatility in Bitcoin, I would be reluctant to be doing a lot of trading off of the 15 minute because it's just too volatile. So I would like to stick with the hourly. And given that, I would be comfortable buying here. If it's going to break that, then I'm going to be stopped out. So this isn't really going to do much for me. And if I'm going to wait for this to go back down here, then likely that's invalidating the count, and we may end up relabeling as an ABC. Right? That's certainly a possibility. We can't disqualify. We don't know that this stays impulsive. We certainly could have. This could turn into an A, B, and then a C. Lots of different ways this could play out, right? So you can't be definitive about what we have here yet until we get more evidence. I need to see a new high. I want to see a tap in the median line. What happens at the 50? Could we be going deeper? Could this ultimately turn into a diagonal? Would it be the diagonal of the 5th or the diagonal of the 1st? These are all the variables that you don't know. So it's always just an odds play. What are the odds? If I'm going to hold here and stay impulsive, I'm going to stay above that wave 1 high. Right? I'm going to allow for a little more depth because I know I could end up with a diagonal here in the 5th. If we're blasting off to new highs, that may be a diagonal in the 1st. So it doesn't make me move from bullish to bearish necessarily, but I don't want to take any more risk than I need to. So for the opportunity to buy between the 38 and the 50, stop on the other side of the 65. Why take any more risk, particularly since we haven't tapped the median line? All right, so now let me just, how am I on time? Oh, I'm running long today. All right, let me show you the problem here because some members ran into this over the weekend. So let me show you this. So this, let's go over to, this is where they had the problem. The problem was on GDAX. All right, so let me pull all this off here so you can see this. And here's just the issue you have with this kind of volatility and the fact that we have multiple exchanges reflecting different prices. So we know that the bulk of the trading over the weekend and the highest price that we saw was on GDAX. Right, so here was 19.7, almost to 20K. All right, so here's the problem that you run into. So this is why you go to your shorter time frames last, and you defer to the longer time frame. So this is the 4-hour Bitcoin to the dollar on GDAX, Coinbase GDAX, same data. So just trading view, we'll call it Coinbase. All right, so same count here, right? 3, 4. We're looking for the 5th here on the larger degree. So on the 4-hour, just as we did before, here's the 1, 2. Right, so we had, right, so I've got that as the 1, 2. So let's start measuring. So let's see. So here from this low here, if this is my 1. Here's my 2. Actually, I have it as a truncated C. So, but we can see that we got a couple of ticks in front of the 50. Do you see that? Right. So on the 4-hour, we get perfect technical trading. That's right where the algos buy it. They front run the 50 by a few ticks, and then they scream it up higher. Here's their first target. Second, they almost get to the negative 618. It's extreme. So whether it's there, I actually think it's there. But so 1, 2. Okay, we know we're looking for that. We know we have a high probability, given the move to the 50, that we've got a 2. If that's my 2, what's my projection for my 3rd? All right, so let's just the rudimentary fib pulls that we always do based on a 1, 2. I'm looking for that high probability zone. So if I take it here, right, I propose that it's here. Actually, again, I'm going to show you why. Because I think we had a truncated C there. So let me go down to the 1 hour, right? Because we looked at that, and we've seen this all over crypto. So we get here's the pull. There's to the 1. Here, let me take that off so you can see it. I propose to you that the 2 is here, that we get because look at the wick. So this is all wick here now. So that we get this big spike down here. Let me blow this up so you can see it. So we get this big spike down here, right? That's the 50, right? So algos aren't trading the Elliott wave. They're just trading where's the 50. So we looked at that. So we know that was the pull. That's where the algos enter a few ticks above the 50. But as an Elliott wave trader, I see an A wave. I get an A, B, C into a 3-wave correction of the A wave. So measuring there. You see it goes right to the 786. So if I were labeling this, look, now I'm on the 1 hour, right? So I'm expecting subdivision. So if I go down here, there's my A wave, goes right to the 50. There's my B, very, very common target for the B wave. As it pushes for new highs, it doesn't get there. Okay, so very common for the B wave. Now we've seen this in crypto for the last 6 months. These truncated C waves. It doesn't get. So the expectation is that a C wave gets below the A wave, but this is certainly not unheard of, and we've seen it dozens, if not hundreds of times across the whole crypto space that we're seeing shallow C waves that give us this triangular pattern, this triangular correction. So if I just draw it that way and I work from here, this is the pattern we're seeing in crypto over and over again. A, B, C, shallow C. So we don't make, so note from that 786, here's the algo target down here to the negative 23, we don't make it. Here was the 50. The trend is higher. We know this, of course, right? So the trend is higher, so you defer to the larger time frame. So since that was the pull on the 50, let me see if I can recreate it for you. Right, so here was the low off of what we have marked as the 4. We go up here. Okay, here's the front run on the 50. So given that, the fact that this B wave here doesn't come down to its target, I would defer to this given the larger time frame and deferring to where the trend is. Trend is up, of course. So I defer to this pull having greater probability of reaching its target, which it does right here, than I do this B wave, right? Because we know algos aren't trading the B wave. They're trading the 50s and the 618s. So the fact that we as Elliott traders know that that's potentially a B wave, we may well see this repeated pattern again of a truncated C wave. So let me pull this off. I know I'm running long today, but let me make the case here because a lot of people got burned on this. So the other thing you would do is look for any kind of fib relationship between the A wave projected from the B. Well, we get a couple of shy of the 618. Coming back this way, there's our Vegas wave. This is just one of those tricky calls where, you just have to know that can happen and that we've been seeing it happen, that we get the shallow C wave. Right? So it happens to be, here's the 50, here's the 38. Right? So you've got a lot of things suggesting to you that potentially your 2 is in. Well, so let me pull back out here to the 4. Right, and show you the problem that a lot of people experienced over the weekend. Okay, so if you'll allow me my count, which is that we have the truncated C wave, then we're looking to project for the 3rd from the 1, 2. So if I go to my fib tool, I take my low here, the beginning of my 1, and I project from what I propose is the 2, which is that truncated C. Look what we get up here, right? This is our highest probability zone for a 3rd wave between the 1618 and the 175, and we actually get a little spike through it. Okay, now I'm on the 4 hour. Okay, let's go down to the 1 hour. Because seeing that, you might think to yourself, okay, well, if that's my 3, well, then I've got this marked off. So this gives me high probability that I've got a 3 here. What am I looking for in my 4th? Well, I'm going to pull from my 2 right here because I'm now got a good probability that I've got my 2 in here. Well, look where we come here. Right? Here's the 4th. Here's the 4th. Now, this is off of the 1 hour. So we hold the pivot here. Here's the 50. We go to and through it. Here's the 618. Right, so it's so it looks different on Coinbase than it did on Bitstamp. Right, we got more extreme because this wick took the price much higher. I think the high on Bitstamp was 16 something. So here we're almost getting to 20. So that's a radical difference between the two. Radical difference. But you've got to pull back and go, okay, given this volatility, I'm going to defer to my larger time frame. Here's where people got in trouble. We had this little spike here. So if you're trying to break down what's happening within the 3rd wave, here was a, this is not an unreasonable thing to do. The only question mark becomes, let me take all of that off. Given the extreme movement here, you got to step back and defer to your higher time frame. So if you went down to the 15 minute, let's see, you were counting it this way: 1, 2, 3, looking for the 4 somewhere down here. You're looking for the 4. Okay, so let's put it right there. So that was the expectation. I got to move this. Okay, so if you're thinking 1, 2 within the 3rd, and you're not allowing for the top to be in here, so let's measure that. So if that's my 1, this is the process you'd be in. There's my 2. Okay, well here's my first zone here. So this is the high probability zone. Here's the 1618175 right there. Okay, we almost get to the 200. We get a little reaction there, but we blow all the way through it. So not unreasonable to think that this was 1, 2, 3. Well, here's where the problem occurred. Here's where you ran into a problem. Let me pull this off. So we're to and through the 2618. So that's, to some degree, that's a little bit of a warning, because that's so extreme that given that, you might be thinking to yourself, well, potentially what I have here is this, right? This ends up being what you had, 3, 4, and then the 5 puts it, given the deferral to the larger time frame. There's my 5. Here's my 4. This is what we ended up with. All right, so let me lower the degree. I'm going to go all the way down to a sub-micro. Okay, this is what we get. And the reason I'm fairly confident in that is because of this. Right, so this is just playing the odds. So if that's my 1, there's my 2. So it could be, it's either here or it could be here. So here, this looks like this actually plays it better, because you get a deeper retracement here. So here's my zone right here. That's my highest probability zone. We get a little spike through it, but we get a very shallow pullback there. So that would tell you that the reason that I would lean towards that is because of where the high probability zone was on the larger degree. Do you remember that? Right. So we as I just showed you. So we took the length of the 1 projected from this 2. We drew the box up there at the 1618175. So it would appear to me that this is the count that you experience. So here's what happened to some people, and to some degree, the structure of it is a tell unto itself. Look at this 2. Compared to, let me just, what would be the 4th, right? So here would be your 4th compared to this 2nd, right? Do you see that? Wildly disproportionate. Wildly disproportionate. This is way too much volatility and way too large a degree, even if you go to that. Say that was my 4th. That's way too large relative to that, right? There's a certain symmetry that Elliott counts will have, and if you've gone down too small in the degree, then you get this giant distortion. This is way too much volatility for a 4th relative to this, and this is what happened to people. So the people that pulled there, and again, I'm not scolding anyone. I'm just saying this would be an easy mistake to make. So if you pull from the 2 and use that as your 3rd, well, you saw this right into the box. So it was very reasonable to think that you had an A, B, C, and that you were going up. But when you roll back over, and come back down here, this now has dwarfed this. It's dwarfed it. So given the high probability zone up here as a 3rd on the larger degree in green, I would now be very suspect of this as the correction of this, just way too large. So anyone who was a buyer here, you got the initial rip. By the way, that rip from that box here, if you were a buyer at the 618, that's 14, and I call it 14,050. It gets up to 16.6. So you have over a $2,500 rip. It's actually a little higher than that, 16.7. So you've got a $2,700, or let's call it a $2,000 rip. But then you fall again. Then you fall over, right? And then if your stop was under the 65, the stops got hit there. So all I can tell you is just the sense of proportion, that was way too much to be the 4th correcting that 2nd. So some people got stopped out here, frustrated, discouraged, don't understand it. Wait a minute, does that mean, so we broke the 6.5, does that mean now the trend is down? Since we've broken the 6.5 on that degree, algos are going to switch. Does that mean they're pushing it down here? Well, again, that's where you've got to defer to that larger time frame. So if you're wrong there and you took the stop, or you certainly had the opportunity here if you were a buyer here to reduce your risk or lock in some profit. So take a partial, when you see a $2,000 rip, not a bad idea to take a little partial off, because you've got the other side to work against. So let me pull that off. So you got to deal with this. it's two-sided. So if you're looking there, right? So where do we go? All right, right to the 50. Okay, it's always a fib fight between the pivots. So we go right to the 50 and then bounce, then fail at the 50, then we're coming back down. Now they don't get their target here. They may still, right? This given what we're seeing here, we don't absolutely know we're going 3, 4, 5. We don't know that this is a fait accompli. We don't know that we must go up there. We potentially have a one wave getting put in here. Right, you can see the 1, 2, 3, 4. We don't overlap the 1. Again, on this 1 hour here on Coinbase, that may very well be just the one wave. We may have the 1, 2 looking to go in to take this higher. But you're going to have to get through the 6.5 up here, the 6.1, the 6.5 to get through that. So next opportunity for GDAX traders, keeping in mind that this is going to be resistance up here. So, if you don't keep the fib pull, at least put a hot box on it. Okay, there are the oscillators here, rolling over potentially. We know this is the 3, right? We know this is the 3. We could have. There's a number of things could happen here. We could be relabeling this. This could get pushed over here. We could have a very complex A wave. We could have an A wave, an X wave, then an A, B. There's a lot of different scenarios that could play here. Right now, there's no reason to anticipate anything other than a one wave going in. So where's the trade? If this is our pivot low here from our 4, and we're going to pull in on a one wave, and again, we don't know. We don't know that that's the top here of this move. So where's the next trade? On GDAX, right here. Right, so we're looking for between 50 and the 618 for a 2 wave. Looking for a 2 wave, not so the 38's a little, it happens, right? In a very strong market, it happens at the 38, but I wouldn't be a buyer on GDAX until we got down to the 50 because I know algos will be all over it there. Here's my Vegas wave offering a little support. So buyer at the 50, stop under the 65. Knowing, right? Of course, it could go down to the 786. And we might relabel the whole thing. So you have potential here for this to be a 3 wave, even though I've got some subdivision here. Right now, that looks like a 1 wave to me. So the opportunity there is for the buy at the 2, but you can't, right? You got to consider both sides. So you got to do this. You got to do that. Where's my high? Right there. You got to look at that. This is certainly possible. Here's my 1. We'd still be above the wave 1 high. We'd still be above it, but it wouldn't be a 2. Now we'd be in an A, B, C. That's why you gotta keep an alternate count and recognize that until proven otherwise or invalidated, you got to keep both sides as possible roadmaps. So now, if we've got a good pivot here, you could draw the larger. You'd certainly want to consider the larger from that low. Those are the dominant pivots. Hard pivot, hard pivot, hard pivot. We aren't to the median line yet. So potentially you've got a corner pocket setting up down here. Right, with that, this is your target. You see that? So very reasonable, right? We'd like to see it, if it's going to retrace, that's where you'd look for it. That's your target, and it doesn't have to go. It could. You don't know the trajectory that it's going to take, but if that's going to be a 3 wave of my 5th wave, I'm certainly expecting impulsive behavior, and I'm going to need to see that get up, and then I'm going to wick this off as my potential 1 wave. So all setting up. I know I'm running really long today. So there's so much to look at there, and with that disparity between exchanges, I guess the larger lesson there is when you see that kind of extreme volatility, look for proportion, right? Could this have been the 4 wave of that 2 wave? Seems unlikely to me. It's just way out of proportion. And when in doubt, pull back a time frame. So if you're looking at the 1 hour and you're not sure, go out to the 4 hour and get a handle on it. 15-minute is a last resort, only for precision entry, and only if you're looking to find that kind of subdivision that you'd want to see to know that you had an ABC or some corrective action here. This was tricky. Granted that the fact that this ends up being the 2 with a truncated C, it's tricky, right? It's not. There's nothing easy in here. There is no easy money to be anywhere in the markets, right? So don't look for it. Okay, guys, I've run really long today. I apologize for going so long. It's because I had to go to multiple exchanges, but I think you get the idea. There's your next opportunity. A lot to chew on in this video, but I'll wrap it there for now.